Hey guys, well, today we're going to talk about the premium and discount buying and selling zones. This topic is also known as supply and demand zones, and today we'll understand how to identify them and when to use it. Okay, so let's see first to the definition. So we have premium, and this is it. Zones, there are zones above the 50% of the Fibonacci tool, special to sell once the price or the market reaches a liquidity sell supply zone. In other words, when the price reaches an order block or an imbalance. Okay, then we have the discount zones. So the discount zones are zones below the 50% of the Fibonacci tool, special to buy once the price or the market reaches a zone of liquidity, buying or a demand zone. In other words, when the price reaches an order block or an imbalance. In this topic, we're going to try to mix everything we have covered in the first two sessions, which is recognizing the ranges, full complete ranges, and then using the order block and imbalances, which are zones that has high probability of reaction. So in the previous lesson, I said to you that we need to be able to comprehend in which cases we were going to base a decision on an order block or when to discard or not to use a precise order block on an imbalance. Okay, so the premium and discount zones are paramount to identify which are the order blocks or imbalances zones that we're gonna take into account in order to have decisions to execute orders in the market. Okay, let's see here. Well, premium zone. Let's talk about a premium zone example. Okay, in this you can see a clear range complete. Okay, a complete range. So we have here the strong high. Okay, we have the liquidity taken, both, and the ending of the range. Okay, so what we're gonna use is the Fibonacci tool. Okay, and because this is an example of a premium zone, all the order blocks that appears above the 50% of the Fibonacci, okay, are the zones we're gonna take into account. Okay, let's see and let's read this paragraph. The zones above the 50% of the Fibonacci, special to sell. Okay, wait. So the zones above the 50% of the Fibonacci are special to sell once the price or the market reaches a liquidity or zero supply zone. Okay, in other words, when the price reaches an order block or an imbalance. Now we can see clearly how it works. When the price reaches one of these zones we're marking here, it means that it will have better chance to continue with the downtrend. Remember that this is a downtrend, right? So when the price reaches one of these zones, could be this order block that is marked here, or the order block that is marked in the upper part, or even the imbalance, which is just marked here, okay? It means that we will start thinking about selling. And this is paramount. And just try to think logically about the next. If we are traders, because we are people who execute order in the market, so it means that we sell when everything is very expensive and we buy when everything is very cheap. What does it mean? That okay, it does mean that we as a traders, we need to know when to buy or when to sell. Unfortunately, some of the traders do not understand this logic. Okay, and this is what I'm showing you with this short video here. So as traders, sometimes we see this type of impulses, right? These really huge impulses in the market. And what is the first thing that comes to our mind is like, all right, we have to keep selling, correct? What happens? The price is not in a correct zone. It's not in a correct zone. Remember that the selling point should be this order block, which is marked here, okay? The imbalance that we have marked here, or this last order block that is up here. But since we just see this huge reaction in the price, what is the first thought as a traders we have? Sell, right? We have to sell. So that's why I exemplify with the next. Some of us have been in this uncomfortable situation of putting a selling here, which in a point where we consider it will be a sell. Why? You see, this is a trend line, right? And if we learn with some of the things that are available on Google, they would say follow the trend lines, correct? Look what happened here. And I'm pretty sure some of you have lived or experienced this situation, which is to put an order selling when is a sell, when is a downtrend, to execute an order following, I don't know, a pattern maybe. For example, we see here a double top pattern. We put another order, but then what happens? The price goes up, okay? And then what happened next? As a retail traders, we may think, oh, now if this is not a sale, the market has changed the trend. So it means that we're gonna buy, correct? So what happened after that? After our stop loss was broken by the market, now we start changing our mind and not taking into account all this strategy that we have been learning. And then we start executing buying orders. Like we start like buying here, people start like buying here as well, because here is like, I don't know, a trend line again. Look, this is a trend line. So they expect the price to get to this point and they put an order there to buy. Yes. But what happened according to the theory we have been learning? In this point, this selling order was incorrect. Why? Because it was in a incorrect zone. It wasn't a premium zone. Remember, if we sell when everything is premium, expensive, and then we make a profit of that, because when the things we sell a product, or we sell in the market, right? A pair, dollar, euro, pound, whatever, when it's very expensive, and then we make a profit when it start losing money, but we're not losing it. We're winning because we know when to sell. Correct? So this is exactly what happens here. Traders put orders here, they lose their orders, then they make up their minds and said, okay, no, we have to keep buying. But what happens? According to the theory, now the range, that's why the ranges are so important. Over the 50% of a range, we have a range here, when the price is over the 50%, then it means that it's a premium zone, which means we have to sell. Now look what happens after that. People start in this point buying. Why? Because they see this impulse, so they think, oh, we have to keep buying, right? And also, I was mistaken by putting this order here, this selling order. So I have just to keep buying. What happened? Maybe the price may have certain reaction. In my example, I let it go a little bit further, but it could get to the imbalance or to the order block or in any of these zones. And here's what we have to sell. And from this point, let's say from that point is when we start like selling, correct? That is a correct, then is when we have a correct order. And all the traders that were like executing buying orders right here, for example, they are losing money. Why? Because this is an example of a downtrend. Yes. So we need to be patient enough to understand when the price get to these zones. The zones are the same order blocks, correct? But we need to understand that the order blocks must be in a premium or a discount zone. In this case, the example is premium. So we have to sell. So remember, when it's premium zone, we have to sell. And we just have to identify in the over the 50% of a range, okay, an order block or an imbalance, or just those two scenarios, order block or imbalance, right? And then execute the order in that area, okay? So this is an example of a premium zone. Now we're gonna see the example of a discount zone, which is exactly the same, but in the opposite scenario, meaning in a buying scenario, right? I am exemplifying here that all the people who were putting were selling sterling at this point, they start thinking, oh, maybe after 3 losses in a row, I may start buying. And when they start buying, then the price take their stop losses. I'm pretty sure you have been in that situation, because I actually was in that situation when I didn't know about this strategy. That's why we are learning it. Okay, so this is key. Okay, these are the premium zones. Okay, premium means expensive, and expensive means selling. Perfect. Here is an example. We have here a complete range, liquidity taken. We have the boss, we have liquidity taken, boss, and here we have the end of the range. So again, our goal as a professional traders is understand that the order blocks and imbalances that may work in this scenario are the order blocks that appear in this 50%. So in this red area. What does it mean as well? That, for example, if we found an order block here, if we found an order block right here, for example, here, the price may have a reaction. Yes. Why? Because it's an order block. It's still a point of reaction, correct? But the price may have a reaction, but it won't respect completely the order block. Why? Because it's not in a premium zone. It's just reacting in an order block, which we already know is a zone of reaction, right? So you could go up here, have a small reaction. Maybe here's when the price make patterns. So you see like a double top, or maybe you see here a triple top, and then people start like selling, putting orders to sell. And what happened after that? For example, it's, I know, New York or London session, and then boom, takes the liquidity of everybody who's selling. And then after that, you start making your mind up and saying, oh my gosh, no, so I have to buy, right? And now what is happening exactly? That the price is in a premium zone, in a premium zone. And it means that now we have to sell, correct? And here is where the order blocks are legit or are valid to take into account. For example, we're gonna see an order block here or an imbalance here, because remember that we have seen imbalances, and that's when it happens. It's the same example we just saw in the video, but now I'm just drawing it for you so it gets clearer, okay? At this point, most of us start thinking, okay, probably this is an uptrend. Here is, I'm gonna see here, people start like seeing patterns, continuation patterns, okay? But what we really have to wait is for this. So here we have to put our selling order in an imbalance. And when the price goes down is when people start buying. So I'm pretty sure you have been in that situation. I was as well. So now people start using the Fibonacci tool incorrectly based on this strategy, because they start buying like in 60.8% or and it's 75%, or they see these patterns of 1, 2, okay, here is the triple top, we're gonna the triple bottom, now we're gonna sell in that point, because buy in that point, because it's an bullish trend. Remember, we are in a downtrend because we already recognize the range. Okay, people get here and then boom. Have you ever been in a situation before when you put like orders and the price just take the liquidity and it looks like the price is against you? This is why it's so key to comprehend the ranges, because in the ranges we recognize the piece of the market we want to work with. Most of the traders focus on this small part of the market, which is bullish. I can see it. I can spot it. It's bullish. It's in a minor time frame. We have to recognize that. At least we're gonna see that later about the strategy time frame. We're gonna base on range, but we're just perceiving that this is the range from the beginning to the end, and it's a downtrend range. That's it. We just have to start looking for sale, not buying. And this is why we need to comprehend about the premium and discount zone. Now let's go and see the examples of a discount zone. Same story. So there are zones. I'm having a trouble with pronouncing this. Zones below the 50% of the Fibonacci. Okay, it's special to buy once the price or the market reaches a zone. So the price reaches a zone, okay? And this will be called a demand zone. In other words, when the price reaches an order block or an imbalance. Now look the difference. If the upper part is called in the upper over the 50% is called premium, lower or below the 50% is called discount. What is the meaning of that? When we want to buy, we need to buy in the discount zone, because it's in those areas where the price has high probabilities of going up. So we still are in a downtrend, okay? Because this is a downtrend range, correct? However, in this discount zone, there are some order blocks and imbalances that we take into account in order to make profit from the market, okay? Now, let's try to follow this short video. Then I'm gonna draw it again for you and we'll understand it much better. We are seeing that in this moment, the price has done like the ending of the range, correct? Now, particularly for this example, we will find that here there is an order block. At this point, nobody is thinking in buying. Why? Because people is seeing the market going down, so they always thinking that it's sell. They don't understand that this is a discount area, right? A discount area. So which means discount buy, right? To buy orders. Okay, I'm putting an example here of someone who's looking here like a double top, right? So they see here this high and they here and selling order, thinking incorrectly, because remember that we just sell in the premium zone. What happens here? The price goes down, right? Activates the order block, which is the discount area or the demand area. Now, people who were selling here in the double top, the price always do that, give them a little bit of joy and then take them out from the market, you see? Now, where was the correct order? Here in the order block. This order block was in a discount area, correct? And it followed all that we were expecting, okay? Which is a full range, right? A full range. Then what we have done is we understand that here is an order block, a high probability zone of reaction. And then we realize with the Fibonacci tool that is under the 50% or below the 50% of the downtrend, which makes it in a discount area. Therefore, we have to buy. That's why the winning order in this example was the buy order. Okay, and I'm just like showing you with the example here. Now you say, Manuel, why? we are in a downtrend. We should expect for selling or expect selling orders, correct? In fact, what we have to do is just wait for the price to get to this premium area and sell. But if you're more advanced, you just can buy because you can take advantage of this small impulse, correct? But at least in this moment, I want you to do is just analyze the market enough to see these reactions. And we're gonna see in a minute how it works in the real market. But let's proceed with the theory. Okay, again, the same example. We have here the strong high. This is a downtrend range, as you can see. But everything when the range is complete or completed, then we can use our Fibonacci tool to comprehend where is the discount or the premium zone. All right. And now we just take into account the bullish order blocks and imbalances that show up in this area. Period. No more. All right. So as an example, again, I'm just gonna draw the same things we saw in the small video before. We're just gonna highlight or try to find reactions in the order blocks that are, for example, here must be another block, you see, and maybe here will be another one. Now, probably in the middle of these ones, here we will find an imbalance. So at this point, we have three possible zones of reaction. And what we have to do is just simply, very patiently wait for the result or wait not for wait for the price to get to that point. So the price will make us think that that we have to sell. Have you ever found yourself in that situation which you think you need to buy, but then you analyze and you say, "Oh gosh, no, I have to sell." But then you realize again and say, "Oh no, I don't know. I have to. No, I don't know what I have to do. I don't know. I don't know if I have to sell or buy." It's because you're trapped in market, right? And the ranges clarifies the real direction of the market. Now we know two things. First of all, this example that we have here is a bearish example. Correct? It's a bearish example. That's the first thing we know. It's a bearish example because we have a strong high. Correct? Second thing that we know, we need to find selling zones, right? Which is in the premium area, which is right here, correct? But what happened at this moment? We can do two things. Wait for the market to get to this area and sell, right? Which will be smarter, but also it's also smarter to know that the price is in a discount area and we can take advantage of it as well. So this is what I was saying to you. We wait patiently for the price to get to this point, maybe go this point, or maybe go into the imbalance, or maybe go even down to the order block, and here it keep pushing up. I know this type of drawings that I'm doing may look familiar for you because you have seen it before in the market, right? And if this is the first time you see it, just try to like memorize it in your brain, right? And when you start analyzing the price, you will start seeing, wow, this is just a random drawing, but it looks actually like the real market behaves, and sometimes it does. Okay, so this is the clear example of or about a discount zone, guys. Now what are we gonna do? This is a simple topic, but because we have to mix it or bond it with the previous order, we of course need to realize how it works. What is the next? If you have further questions about this, please check the presentation, check my videos, revise the Q&A question part of this course, which I will highlight or answer some of the questions that my students have about this topic, right? And now homework, because remember that trading is a matter of exercise. You need to work out your eyes, in other words, to identify what the premium and discounts areas are, and then you can select a proper order block and imbalance to make a decision. We have to identify first 10 ranges, bullish or bearish, okay? And then we have to find its premium and discount zones. And then we have to identify the order books and imbalances that exists on that range, okay? We're gonna see in a minute how to do the homework. I'm gonna show you how to do this, and I want you to repeat that as many times as you need, so you can really understand these concepts, okay?
Hey guys, before we continue with the video, have you ever or hopped into different strategies? My piece of advice is stick to this explanation and the previous ones and the ones that are coming, so you have a complete whole idea how this smart money concept strategy works. So to do that, please subscribe to this channel and hit the notification button so you will be aware about all of the concepts and all the information you will need to follow this strategy. With no more to say, my friends, let's keep watching the explanation.
Perfect, guys. Now let's see an example of this price and discount zones, price, and now also we're gonna try to see all order blocks, ranges, and this new topic. Okay, let's try to. This is the euro US dollar. I use this currency pair to work with, and the idea is that you use the one that you want to trade the most. I use this one as an example. I'm gonna use the last impulse. Buy side I already identified, but I hope you can also identify it. I'm gonna use this one here. See, this is the beginning and this is the end of the range. It's not completely well marked, so we're gonna do everything from the beginning. So first, we're gonna write here what you're gonna do, and this is what you want. I want you to do as a homework. So number one, so we're gonna first identify the range. Okay, that's the first thing. Second, we're gonna use, okay, and this is the thing, identify an ended range or a full range. Okay, a full range or an ended range. What by ended range? I'm gonna do that in a minute. Okay, sometimes the ranges are not completely finished, and we need to know how to work with that. We're gonna see that in a minute, as I said before. So first step is identify a full range or an ended range. Second, we have to identify premium and discount zones. Okay, premium and discount zone, and then we're gonna analyze. And now we're gonna analyze after that the order blocks, all right, and imbalances that really works, because I know in the previous homework that you have done, I'm pretty sure you have done it, right? You have understood that there are plenty of order blocks out there out there in the market, and there are a lot of imbalances as well. So what you need to realize is, okay, what are the ones who works? Okay, we need to understand what are the ones who really work, and now this is the answer. This, let's try to analyze. Remember, this is to understand it. First, we have to identify a swing low. Here is the swing low. I could spot it here. I am pretty sure you also saw it while I was talking, right, guys? So this is the liquidity taken. So this is swing low. Then the swing low is created. The swing high is created. Oh gosh, wait. The swing high is created right here. From the swing high, the liquidity is taken. Perfect. And from this new low or lower low, we make a boss. Okay. So now, what is the meaning of that? What is the meaning of a boss? It means that this low becomes the strong. We already know that by heart. We have seen that in the previous sessions, correct? And if you don't understand this by heart, it means that we have to keep practicing. Okay. Now, this is an example of a strong low in 1 hour. Okay. My advice is do this homework in 1 hour, because as intraday traders we are, or this strategy works every time frame. However, I use it for intraday, and this is the one I teach for my students. Now we're gonna identify the weak high. This is the weak high, very obvious. This is the weak high, because it's the highest point of the market, right? However, again, we're gonna do the homework of analyzing properly where is the swing high. So this will be the last. This is the swing high, correct? So the swing high is created. From the swing high also is created swing low, and same story but vice versa. It means from the swing low the liquidity is taken, right? And after that a boss is created, which is this is the boss. So this is very clear for all of us. We have worked with that in the previous 2 sessions. I'm just reviewing it because it's necessary, and you need to repeat this as many times as you just can just see it, spot it. Just when you just see the market and you recognize the range, then is when you say, all right, I've been doing okay. I've been practicing enough. If you still have to do the exercise of marking the liquidity taking, the boss, the strong low, strong high, do it. I do it every day because it's just a matter of discipline. Okay, so continue with the homework. We have already identified a full range or an ended range. Perfect. Now we're going to identify the premium and discount zones. So we have here Fibonacci, the 50%. In the previous video, I taught you how to make this Fibonacci tool. We have this very clear. Now, everything that is from this 50% and above is a supply zone, right? Which means selling zone, right? Selling area, supply, okay? And everything that is down the 50% of the Fibonacci tool, which is all of this, it's or discount zone. It's on discount, which means cheaper. Discount, cheap means buy. Perfect. This is it. Okay. Now it's very clear for us. Red is for selling, blue is for buying. Very, as in the app, right? As in the MetaTrader app, we can see it. Perfect. What do we have to do now? We're gonna now. This is the thing, and this is the thing. I'm gonna ask you this question: if we are in a strong low range, right? Or the strong low is that is or what is the condition for this to become a strong low? One of the first condition is that it is a bullish trend line. Correct. Now, if it is a bullish trend line, it means that we'll keep looking for buying orders. Correct. Excellent. Now we're just gonna try to identify the third point, which is order blocks and imbalances just in the discount area, which means cheap area. All right, perfect. Now let's go back to the theory of the order blocks. Remember, how do we identify an order block, right, guys? The order block was what? The order block was when it's a bullish, and when it's a bullish order block, is the last bearish, right? Last bearish candle in the price. So is this one from this to this? We all agree with that. Now look, we just have to mark this thing. Perfect. Now in this point, we could see the next. The order block is a zone of high reaction. Yes or no, guys? Well, if we could see here, probably would say, oh yes, look, it had a really good reaction here, and it means that it goes up, probably touches a little bit, just touch the sensitive zone of the candle, which was the candle wick, correct? But it didn't enter to our fair value. Okay. So remember that price may react in two areas, an order block or an imbalance. Now, if this do not satisfy our analysis, let's try to identify an imbalance. And look at the next. We will gonna see the next imbalance. What is after this order block? This imbalance appears. And I know you remember the imbalance theory as well. How do we identify an imbalance? Remember? No. So we will find three candles. So this is the candle number one, this is the candle number two, and this is the candle number three. Perfect. So the imbalance exists between the candlestick wick of the candle one and candle three, right? So it means that imbalance is mostly in the candle number two, and that's something we have practiced the previous session, correct? Now let's mark this imbalance, and I'm pretty sure that with imbalance we can get satisfied, let's say, about our perceiving the reaction of the market. Okay, look at the next. Here is, and here is imbalance. So at the very beginning, when we mark this imbalance, the price do not mitigate this zone. So it left the 50% without mitigation, was not efficient at all. But now look at the next. Did it cross the 50? It touched the 50% and even goes a little bit further. And in this case, I would say that the price had a reaction in the imbalance, correct? Even it gets to the order block. This is like too close to the order block, and even it has a second reaction here. That was let's say, did not get to the order block. You just get to the imbalance. Okay, perfect. Now this is what I want you to identify. This is what I want you to do as a homework. Now, what we can realize with this example, simply, my friends, we have already a range, which is this bullish range. Okay, in this bullish range, we will find discount areas, premium areas and discount areas. And in these discount areas, which is because it's a bullish example, we found an order block and imbalance which follow the pattern, which follow the theory so far. Okay, it means that these order blocks that we have already recognized has reaction in the market. Wouldn't be enough for you to have this. I don't know how many pips was it, but if you put an order here, a buying order, buy limit order, just something I would put from this low to, I don't know, probably this high, it would be how many? 60 points, 60 pips, more or less. Will it be enough? Definitely. But we just have to be patient enough to wait for the price to get to this area. So, for example, this range was on Thursday, June the 5th. Okay, it wasn't ended up. We realized that it was ended up on Friday. On Friday, we realized, oh, the price ended up here. But in the same Friday, it enters to the demand area, the order block, to the imbalance, bullish order block, and then what happened? Keep pushing up, keep pushing up, keep pushing up. Even it came back and retested the same area, mitigate some of the orders that were here, some of the liquidity, and keep pushing up. All right. Now, what will the price do here? This is just what I think it may do. It's just like, because we're in this is a bullish impulse, bullish trend line. It respected the strong low. Well, it's highly probable that this keep pushing up, right? What will happen, guys? Other traders that do not know this theory would start looking for selling orders, right? For example, many people were selling here in a double top. There is one top, double top, triple top, sell, the price to the liquidity, and maybe keep pushing up, right? I think this is enough for today's session. I hope this has been clear enough. If you have any questions, please ask me. Remember, do this exercise with 10 bullish ranges, but also maybe with 10 bearish trend lines, okay? Or ranges, okay? That's all. Okay, hope you have enjoyed this session. Hope this theory.
Right, guys, we have get to the last minute of the class. The big favor for you will be that please leave me a review on my Facebook fan page. With that, I'm gonna build trust not just for you but for other people who may watch these videos. So if you like, this is the only favor I can ask you. And with that, see you in the next lesson.